Now let's look at the next subtopic, which is the accounting equation. Learning objectives. At the end of this video, you should be able to describe the accounting equation and indicate the effects of transactions on the accounting equation. We first look at the basic accounting equation, which incorporates the elements of the statement of financial position, which is assets equal to owner's equity plus liabilities. This equation is a foundation of double entry accounting, whereby each transaction has two aspects. A change in one aspect will have corresponding change in another aspect. Meaning to say that, if the amount of assets change, the total amount of equity plus liabilities will change as well. Also, in the case of assets, a change in an asset can have an opposite change in another asset. At any point in time, the total assets is equal to the total of equity and liabilities. This equation also displays that all assets are either financed by borrowing money to outside parties or supplied by the owner. Now, we will look at the effects of transactions on the basic accounting equation. Illustration 1. Owner investing cash into the business. Example, on January 1, 20XX, Beckham started business and invested Rm50,000 cash to begin his business, Beckham Trading. The effect of this transaction indicates that asset of the business, which is cash, increased, and this cash is contributed by the owner himself. It is also the capital. Therefore, the equity of the business increased as well. And this transaction has no effect on liabilities. Next. Illustration 2. The transfer of cash into the bank account. Example, on January 2, 20XX, the business opens a bank account and deposited Rm45,000 of the cash into the bank account. This transaction indicates that the cash of the business decreased due to transferred to the business bank account. Therefore, the cash at bank of the business increased. Based on the accounting classification, bank account also classified under asset. Hence, for this transaction the changes only happen within the assets and no effect on equity and liabilities. Next. Illustration 3. The borrowing from bank. Example, on January 6, 20XX, the business borrows from bank amounted Rm30,000 and deposited the loan into bank account. This transaction related to liabilities. The liabilities of the business increased because business borrow money from bank and this money was deposited into the business bank account, so the amount of business cash at bank increased as well. Next. Illustration 4. Buying of fixed assets by check. Example, on January 10, 20XX, the business purchased fixtures and fitting by check amounted Rm10,000. For this transaction, the changes only happen in assets, as this transaction affect the value of assets only because both fixtures and fitting and the cash at bank classified under assets. When the business bought fixtures and fitting by check, the business cash at bank will decrease while the value of fixtures and fitting increased. Next, the last illustration for the effects of transactions on the basic accounting equation. Illustration 6. Owner took cash from the business. Example, on January 16, 20XX, Beckham took Rm200 cash from the business for his personal use. When owner took something from the business, the transaction needs to be recorded as a drawing. Drawing will cause the capital value, i.e. owner's equity, to decrease. At the same time the value of assets will decrease as well. Therefore, asset decrease and owner's equity decrease. When we record all those transactions from illustrations 1 to 6 using basic accounting equation, eventually we will get the equal amount between assets and equity plus liabilities.